Last month, my market update was about a tale of two markets, the difference between San Francisco Bay Area and much of the rest of the country. This month, I'd like to take that idea one step further. Even within Silicon Valley, we're seeing two very different markets. On one side are those benefiting from the AI boom, founders, early employees, investors, and those participating in IPOs or other liquidity events. They continue to create significant wealth, and much of that wealth finds its way into our local real estate market. But there's another group that doesn't always get talked about. These are the talented professionals, managers, and executives who earn good W-2 incomes, but aren't participating in those capital events. In fact, many are facing an entirely different reality. With recent layoffs at companies like Microsoft, Meta, Cisco, and Salesforce, there's a growing sense of uncertainty. Even those who remain employed are asking themselves, am I next? At the same time, they're watching home prices continue to climb. That's what economists call asset inflation. The value of the assets they're trying to buy keeps increasing faster than their income can keep pace. A W-2 salary, even a very good one, simply doesn't have the same upside potential as equity in a successful startup or an early investment in the next AI company. As a result, we're seeing another divide in our own community between those whose wealth is accelerating through ownership and capital appreciation and those whose purchasing power feels increasingly squeezed. I've been thinking about those two terms that describe these very different experiences. One is Bidmaxxing, buyers whose wealth allows them to continually outbid the competition. The other is what I call the squeeze, high-income professionals who find themselves caught between job uncertainty and rapidly rising asset prices. They're earning good incomes, but each year, home ownership seems just a little further out of reach. Perhaps the biggest lesson is this: Silicon Valley has always rewarded innovation. Today, it's also rewarding ownership. The gap isn't simply between rich and poor. Increasingly, it's between those whose wealth is growing through assets and equity and those relying primarily on earned income. That's why we're seeing what appears to be two housing markets operating side by side. One is driven by extraordinary liquidity and wealth creation. The other is made up of smart, accomplished professionals who are feeling the squeeze of rising home prices and greater career uncertainty. Understanding that difference helps explain why our local market often behaves so differently from the rest of the country, and even differently from our own neighbors. I'm Lisa Keith, and that's this month's Market Update.